Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh and Kanishka Sarkar. And over the next 1 hour, we'll get you updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar bright and early this morning. And while speaking of stocks, Kanishka, let's take a look at the handover coming in from Wall Street.
A very good morning, Shreyansi. Well, it's indeed a very positive handover from the US, yet another consecutive day. The Dow jumped nearly 600 points on Monday as investors hope Trump softens his tariff stance. The stocks on Wall Street rallied in optimism that Donald Trump may hold back from implementing some of his wide-ranging tariff plans, and so the US could skirt an economic slowdown from a protracted trade war. The Dow Jones Industrial Average jumped almost 600 points or 1.5% overnight. The S&P 500 also added close to 2% yesterday. In fact, it has recovered 4% from its March lows. The tech-heavy Nasdaq Composite, on the other hand, gained more than 2%. In fact, the shares of Tesla, which have fallen nine straight weeks, were up nearly 12% yesterday. Now, Meta Platforms and Nvidia each climbed more than 3%. Now, despite these gains, it must be noted that investors remain jittery over a potential rise in inflation and recession ahead of the Trump April 2 start date for reciprocal tariffs. However, sentiment appears uplifted on reports that duties could be more narrow in scope and that sector-specific tariffs are expected to be delayed. Now, Trump late Monday afternoon said that he may give a lot of countries breaks on some reciprocal tariffs. He also told the press, following a cabinet meeting, that levies in sectors such as pharma and autos would still be coming in the near future, essentially confirming that they would not be away from the early April deadline.
Well, absolutely. That deadline is looming. It's just around the corner, and that is something that we're definitely looking at. And some concern that we had going into this week, of course, was on the lines of whether or not that momentum that we've seen towards the end of last week is going to be seen this week as well. And that is something that you're seeing play out, at least when it comes to the equity markets. Even when you take a look at oil, that's the one that gained 1%. Thereabout on Monday, you do have US President Donald Trump saying that he'll be imposing a 25% tariff on countries that buy oil and gas from Venezuela. So that is important. In terms of tariff commentary, other than that, you do have price gains that were capped. However, because you do have US that gave oil producer Chevron until May 27th to also wind down its oil operations and exports from Venezuela. So those are the two kinds of stories that you're seeing play out as far as oil prices are concerned. On the back of that, you do have Brent crude that was up 1.2%. US WTI as well, similar moves coming in 1.2%. And the level that you're looking at for Brent crude is somewhere near $73 a barrel. And when you take a look at US WTI as well, $69 a barrel is the kind of level that you're looking at least when it comes to US WTI. Of course, that's the OPEC plus price, OPEC plus hike in terms of output. That is going to be very important for prices. So definitely something to look at come April, Kanishka.
That is correct. Very key commentary coming in as far as oil is concerned. Now, moving on to some cues to watch. Well, in the US Conference Board Consumer Confidence Index is to be out today. In terms of corporate action, IRADA board is to consider fundraising. Well, it's also the last day to buy shares to be eligible for an interim dividend when it comes to REC and TVS Motors. Now, in terms of other events, New York Fed President John Williams is expected to speak today. So that's some key commentary to be watching out for.
Alright, and that's some key commentary to watch out for. But as we inch closer to the April 2nd deadline, tariff headlines continue to mount. US President Donald Trump said that he will be imposing a 25% tariff on countries that buy oil and gas from Venezuela, like I mentioned earlier, amid efforts to increase pressure on President Nicolas Maduro and China. You do have Trump making that announcement in a post on social media platform Truth Social. Now, to put this announcement into perspective, Venezuela exported about 660,000 barrels per day in 2024. China, in fact, was the largest destination for the South American nation's crude exports, purchasing 270,000 barrels per day last year. Now, US was in fact the second largest destination for Venezuelan crude last year, importing about 233,000 barrels per day. So those are the numbers to put all of this into perspective. Additionally, you do have the Treasury Department that has also extended Chevron's license when it comes to producing oil in Venezuela until May 27th.
That is correct. Lots of announcements coming from Trump. In fact, the US president also signaled that he may provide exemptions for certain countries when his administration imposes reciprocal tariffs on imports next week. Trump has for weeks indicated that he would impose reciprocal tariffs beginning April 2nd on any nation that has duties on American goods. But as the date is approached, some administration officials have suggested that there could be some room for adjustment. Additionally, Trump has also signaled additional tariffs on specific goods could be coming as early as this week. He cited automobiles, lumber and semiconductors as areas that could be targeted.
Absolutely, that's the update as far as tariffs are concerned. Now, April 2nd is the date that we're marking on our calendars, but onto some stock-specific action, then Tesla staged a rather strong comeback as shares were seen headed for their best day this year after falling for 9 consecutive weeks. In fact, shares closed Monday's session higher by nearly 12%. The stock, in fact, notched its best day coming in since November 6, 2024. That's the day following President Donald Trump's victory in the election as well, making it the best performing stock in the S&P 500 for the day. Important to note, though, that the shares are still trading more than 44% below their all-time high when it comes to December.
Well, that's quite a rally in Tesla. Now, moving on to some corporate news. South Korean conglomerate Hyundai has announced a roughly $21 billion investment in US onshoring that includes a $5.8 billion steel plant in Louisiana. The plant is set to hire more than 1,400 employees and will produce next-generation steel that will be used by Hyundai's 2 US auto plants to manufacture electric vehicles. The investment was announced at the White House by Donald Trump, Hyundai chairman Yuuzhan Chung and Louisiana Governor Jeff Landry. Remember, Hyundai's announcement comes as a major international conglomerates are racing to dodge tariffs and avoid a trade war ahead of the Trump April 2 deadline for tariffs.
All right, then moving on to the latest commentary then coming in from Atlanta Fed President Raphael Bostic. Now, he said that he anticipates slower progress when it comes to inflation in the next few months, and as a result now sees the Fed cutting its benchmark interest rate only 1/4 percentage point by the end of this year. In fact, he also warns of continued macro uncertainty, and that is something that could weigh on the central bank's decision making as tariff pressures continue to mount. So that is some key commentary coming in as far as Raphael Bostic is concerned.
That is correct. Very key commentary is awaited. With that, it's now time to slip into a very quick break. Stay tuned to ET Now for more news and updates on the other side.
Welcome back. Thank you so much for staying tuned in. Well, let's get your check going as far as the Asian markets are concerned. When you take a look at Australia's ASX 200, that's the one that climbed 0.5% in early trade. You do have the country's budget that's going to be tabled by the Treasurer later in the day. So you do have ASX 200 on your screen, 0.6% uptick coming in as far as that index is concerned. You do also have Japan's benchmark Nikkei. That's the one that's rising just about 0.8% at this point, 0.9% as we speak. Over in South Korea as well, the Kospi is also the one that opened higher, holding on to, it in fact slipped into the red for now, as you can see on your screens as well. That's Kospi 0.6% downtick coming in for that one, and Hang Seng also down over 1%, holding on to a tinge of red. On the flip side, you do have Shanghai that's marginally in the green, so 0.1% uptick coming in as far as the Shanghai is concerned. Nifty, of course, shut shop around 23,700 thereabout. Currently, what is being penciled in is a good start for us, not a very bad handover to look at as far as Asia is concerned. Nothing to write home about, nothing to complain about as far as Asia is concerned, and a decent handover as far as US equities are concerned. So let's see how that pans out for us, Kanishka. Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates then. In fact, the SEBI has decided to hold off on proposed amendments when it comes to merchant banker regulations, choosing instead to dig deeper into conflict of interest concerns. Rather than rushing into rule changes, the market watchdog is assembling a high-level panel to scrutinize these issues, come up with a more robust framework when it comes to these issues. And with investment banking deals also growing bigger, conflicts getting trickier, SEBI in fact wants stronger guardrails to ensure that the market intermediaries play fair. The big question though that lingers is, will this review lead to tighter norms or greater flexibility? The panel in fact will be submitting its report in 3 months, and until then the industry awaits. In a move to improve ease of doing business, SEBI doubles FPI disclosure threshold as well to 50,000 crore from 25,000 crore, while also setting up high-level panel to review conflict of interest issues. Meanwhile, you do have new top boss Tuhin Kanta Pandey also shedding light when it comes to the road ahead for NSE IPO.
I think there is no larger message except that we have a very robust institution, and we'll carry it forward in terms of, the best outcomes that we can have. We have 3 mandates in SEBI. One is investor protection. Secondly, we have to develop the market. And third, we have to regulate it. Now, all these mandates is a very big task that we have. FPIs have to really decide where they want to go, for what return, the kind of regulations, etc., which will really facilitate. I mean, we are in no way wanting to, scare anybody away or things like that. And we are willing to engage as much as we are willing to engage with all domestic capital as well. So, I mean, engaging with people with capital and making markets, strong, that is also, one of the goals SEBI has.
Well, on the sidelines of the same address, talking about the much anticipated D-Street listing of NSE shares, TK Pandey also said that SEBI will look into the issues plaguing the IPO. Listen into the comments.
We don't answer on specific, but surely I think we'll look into it. I've just, we'll apply our mind on how is it and how we can take it forward and what's the issues.
Alright, then that's the latest coming in terms of commentary. Then let's also go across to Ankur Mishra, who's standing away with the key takeaways when it comes to the board meet then.
Yes, SEBI board has approved increasing the threshold of FPI disclosure norms from rupees 25,000 crore to 50,000 crore now. Apart from that, there is also an approval of high-level committee, and that is being formed for checking the code of conduct of SEBI members. Now, this has been done after there has been allegations against a former chairperson of SEBI, Madhvi Puri Buch. But now, there is a high-level committee which is going to be formed. The mandate has been given that suggests steps for stronger ethics, transparency among board members and officials. And when will it submit the report? It is likely to submit report within the 3 months. That is the mandate which has been given by SEBI board. Apart from that, there is also an easing of category 2 AIFs amid drop in unlisted debt securities. No shareholder nod needed for public interest directors on MII boards. That has also been approved by SEBI board, and SEBI has also allowed IAs and RAs to take advance fees or up to 1 year. Earlier, this was allowed for 3 months to 6 months, but now that time period has been increased. And there is also an important comment coming in on NSE IPO, where SEBI chairman has categorically said that they will look into the issues of NSE IPOs, if any.
Well, those were the key takeaways from the SEBI board meet. Now, moving on to market. Well, is the current rebound on Dalal Street here to stay, or should one prepare for what may be the final leg of the correction? With the uncertainty brewing over US trade policy and geopolitics, will Nifty defy trends and head to higher highs in the new fiscal? We'll hear out the comments from Carnelian's Vikas Khemani, Value Quest Ravi Dharamsi, and Goldilocks Gautam Shah to find out.
My sense is that we will hit new high somewhere next financial year. Whether it happens in 3 months, 6 months, I don't know. That again depends on a lot of variables as they play out. So same thing will happen even in mid and small cap space. It might happen that some of the sectors or segments of last year or last might not do well. Like if you remember in 21, new age companies did very well. Chemical stocks did very well. In the next round, they did not recover that well and did not do that well, right? So this kind of rotation do happen, this kind of situation do happen every now and then, and one has to kind of take note of that and move on and adjust and align.
Valuations have corrected, come to long-term or below long-term average. So from that perspective, barring a major crisis breaking out anywhere in the world or domestically, I think most of the correction seems to be done. Can never rule out another 5% kind of a correction. But I would put my money on the fact that worst seems to be over for the moment.
I cannot say with confidence that the recent low was a bottom. There is a possibility that we might find resistance at 23,050 or 23,250. Thereafter, possibly turn around and possibly retest the recent low once. But that's really not important. From a medium-term, long-term investor perspective, even current levels is a great buying opportunity after the kind of fall that we've already seen. So 21,800 thereabouts, I think would be a very important support. And 23,500, 24,000 is going to be sort of a resistance.
Alright, then that's some key commentary coming in from the experts. It's time for a very quick breather on the show. We'll see you on the other side with some more news and updates. Welcome back. Thank you so much for staying tuned, and you're watching Market Cafe on ET Now. And let's get to the futures and options roundup then. In fact, Ansh is standing by with just that. Ansh, over to you.
Right, so let's start with Nifty first. Nifty has been advancing for 6 consecutive sessions, has been making higher highs for 6 consecutive sessions, and not just that, Nifty has surpassed above that key 100 DMA level as well. With this, if we talk about index options, then we are seeing most active put writing has been happening at 23,500 strike, indicating option traders are expecting very good support around this level. If we talk about Nifty Bank, then we saw good positivity here as well, as the index has actually touched this year high levels, surpassing above that key 200 DMA level. Whereas if we talk about index futures, then we are seeing that open interest jumped by around 28% for the April contract, indicating significant long build-up happening in banking space. So Nifty Bank is clearly outperforming Nifty here. If we talk about index future FII's positioning, then we are seeing in the previous session, FII actually added some around 1,400 contract. They added some short as well, but net to net they were addition by around 1,200 contract, due to which the total long position has inched higher from 31.8% to 32.1%, which is this year's high level, indicating they are very bullish in this market. At the same time, if we talk about a retail position, then they have actually covered their long by around 9,800 contract. They have covered some short as well, but net to net basis they have covered their long, and they were negative in the previous session. But if we talk about the trend, then FII on 4th March, when Nifty made a short-term bottom and reversed from there, at that time, FII net position was minus almost 1.9 lakh contract, and now it is just 95,000. So we are seeing a 50% reduction in the net short position, indicating there's a gradual contraction in net short positions. And last time when we saw FII net positive, that was on 4th November. So let's hope to get there soon.
Thank you, Ansh. Well, that was the snapshot of the F&O segment. Now, moving on, lots of stocks to watch out for today. My colleague Gaurav is joining me to share the list of stocks that should be on your radar today.
Well, yes. First, let's talk about Zaggle Prepaid, because the lock-in period of this stock is going to end today for 1.5 years, and with this, around 20% of the shares will get unlocked. Other than that, IREDA is also going to be in focus, because board is going to have a meeting to discuss about fundraising in FY26. Other than that, HCL Technologies is also going to be in focus today, because Western Union has now formed a strategic partnership with HCL Technology to explore and develop the AI technology for the company. Brigade Enterprises is yet another counter which will be in focus, because this company has announced a strategic land acquisition in Bangalore with the gross development value of more than 900 crore rupees. Other than that, Restaurant Brands of India is also going to be in focus today, because this company has opened its QIP with a floor price of around 62.32 rupees. RVNL is yet another counter which will be in focus, because this company has recently won an order and has been announced as a lowest bidder for an order for 115 crore rupees. Lastly, let's also not forget that there are multiple PSU banks which will be in focus on the back of the QIP. So first, let's talk about UCO Bank, Punjab and Sindh Bank and Central Bank. All these banks have launched their QIP at a discounted price to their current market price. And on the other hand, we also have Indian Overseas Bank, who actually raised around 1,400 crore rupees via QIP at a price of around 40.57, which is again at a discount to the current price. Lastly, let's also focus on Britannia Industries, because one of their facilities at Gujarat's Jhagadia manufacturing has been actually affected because of the strike that was called by employees, and it can impact the company's overall manufacturing facilities and the working. So definitely watching out on all these companies on the back of the news flow that we have received in the morning.
Thanks, Gaurav, for getting us that list. So those are the list of stocks that you should be watching out for bright and early this morning. Tell you what, bright and early this morning, let's also get you some key commentary so that you can start your day right. In fact, we caught up with Gautam Shah, CMT founder and chief strategist at Goldilocks Premium Research, who has a positive outlook when it comes to a whole host of sectors, financials, metals, and the PSU basket. To be specific, in the current market scenario among financials, in fact, he's betting big when it comes to NBFCs. Let's go across and listen into his market outlook.
Ask somebody who is committed into IndusInd Bank or an RBL Bank or a Bandhan, or for that matter, even a Kotak in the last couple of years, there has been gross underperformance. Whereas somebody who has been committed only into an SDFC, ICICI and SBI would not have felt the correction of the last 5 months. And that's my focus area. I want to stick to the big boys. I want to stick to quality. I want to stick to relative strength. And I'm still not tempted to buy any of the underperformers despite the fall of about 20 to 40%. I think I'm very comfortable with SDFC, ICICI and SBI. And I think these three stocks can deliver upwards of 20% over the next 12 to 15 months. They've handled the market weakness really well. Any market stability from here, possibly April onwards, I think they will be the star performer. And SBI, I think at current levels of 700, 720 has been my long-time favorite. I do see that stock, inching towards a level of 1,000 if you have to take a 12 to 18 months view.
That's quite interesting. Other than that, Gautam, what do you feel about a Bajaj Finance, a Chola, a Shriram? Because, much like the consensus playing out in banks, people are pretty bullish on NBFCs too.
Yeah, I think I've been super bullish on NBFC for the last 4 to 5 months. In our big picture report, we specifically highlighted the custom index of the NBFC space. We like the entire basket. In fact, Bajaj Finance has been on our radar for a while now, and I do see them doing, very, very good things over the next 12 to 18 months. So within financial services, the top pocket that we like is NBFCs. I think the valuations are very comfortable there. The visibility of earnings is there, and the charts have beautifully set up in the last couple of months. So the entire NBFC space, Bajaj Finance, Finserv, Shriram Finance, Chola, Sundaram, M&M, L&T Finance, all have very good charts, and it's looking like a new mega trend for the next 12 to 18 months.
Right, but Gautam, power as a space, that is looking interesting indeed, though on the fundamental side, we have been talking about the rise in the power demand and how some of these companies are now gearing up, and even the prices are seen to be stable at this point. But technically, what is your take within the power space? Which are the stocks that you are liking at this point in time?
Just because stock markets have corrected so much and everybody seems to be very pessimistic, it doesn't mean that the India story has gone away. I do believe that the structural India story is very much intact. We might have patches of underperformance. We could even have a bear market for a year, but that doesn't change the overall structure of our bull market. We've had a great rally in the last 2.5 years. If you have to digest that for about 6 to 8 months, you can't say that India has gone off track. Keeping the India structural story intact, I think power, infra, and real estate are three pockets which I think will do exceedingly well. And these are themes that are here to stay. And after this recent correction, we do like the top 3 power stocks. I think they're going to outperform, and this is a great opportunity to buy into them. Similarly, I think the infra story is not going away. I think we've had great news flow in the last few months from the government side. So I believe infra will also pick up from a top stock perspective. And real estate is a mega story. We've had multi-bagger returns in that space. Some correction in the last 5 months, but I think all the 4-5 top stocks are now ready for the next wave on the upside.
2024 has been a great year from some of these platform companies. I'm not sure whether you track these companies very closely, but just on the technical front, do you believe that now is the time to maybe start looking into some of these high beta names, case in point being Zomato, Paytm, even for a matter PB Fintech, or even say Dixon? What's your take on these companies? Any stock that looks very interesting to you at this point?
See, there are landmines everywhere and you need to be very careful. We've seen so many of these platform companies correct so much in the last 5 months that sometimes you want to give up on the fundamentals when you see the price action. Yes, there is no doubt that some of these new age platform companies will do very well from a 3 to 5 year perspective. And I think Zomato and Cartrade have been on top of our list, and possibly a Nazara Tech, which I think is very, very interesting at today's prices. But aside of these three, I would be a little wary, because I think after the correction of the last 5 months, many value stocks offer much better risk reward and margin of safety. So why would I be adventurous in getting into some of these platform companies where the entire data or the earnings is on the Excel sheet and you might not see it, given all that's happening in the country right now and the slowdown and whether the pickup at all is going to happen in the next couple of quarters, we do not know. So key point is risk reward not in your favor, but don't ignore them. I think there are a few names, couple of names I gave you, which I think can stand out.
Gautam, also what happens to, some of the more resilient names in this market fall? And I'm going to get specific here. You can choose to not talk about it or give us a sectoral overview. Some of the hotel stocks, for instance, aviation is one of those core portfolio themes. Look at within telecom, a name like Bharti. These are actually names which have not fallen at all in the market correction.
All of them are top quality, Aisha. I think that's the reason they have not corrected. Ask somebody who bought a Lemon Tree or many of the other hotel stocks which have corrected about 40%, and ask somebody who's been invested in Indian hotels, and you would say that there is no impact at all. In fact, Indian hotels has been a favorite for almost 4 years now, and I believe it will do much, much bigger things if somebody has a 3 to 5 year view, even from current levels. So the key message from the market is quality and reasonable valuations have survived in the last 5 months. And this is what is going to play out, because in an environment of a possible slowdown, you can't run away from it. You can't talk about liquidity and say India will keep doing well just because liquidity is in, which was the case in point last year. So I think anything that is top quality leader in the pack, whether it's an Indian hotels, an MCX, an Indigo, a Bharti, an HDFC Bank, a DLF, all industry leaders, all done very well in these last 5 months.
Quality and reasonable valuation is what Gautam Shah is betting on. Now, moving on, we caught up with Vikas Khemani as well, the founder of Carnelian Asset Management. And he also spoke to us about his favorite sectors in the current market scenario, from IT, defense and PSU to banking and financial services and power. Let's listen in to his views on all those sectors.
Over last 5, 10, 15, 20 years, whenever there is a technology transition which has happened, Indian companies have benefited more than actually lost, whether it was Y2K to enterprise, ERP to digitization to cloud migration, everything. If you see, opportunity size has only become bigger and bigger because fact that there are three major drivers of IT sector, and this I'm talking about structurally. There could be 1 year of here and there can be transition, which is right now we are going through, but India's leadership in the IT services space, right? I mean, Microsoft can go and sell Azure, but the lift shift implementation has to be done by the Indian IT services company, right? Same with, say, a constant technology disruption. Second, our market leadership in the space, and thirdly, aging population elsewhere, which will make sure that more and more technology is adopted. So I think all these things are the structural driver of the IT sector, which will remain. Now, using AI. IT some companies will deliver services differently. So to that extent, their cost structure might go down. To that extent, price deflation might happen, but that has always happened. Every time IT companies have reduced prices and got more volumes. So like I said, we remain positive in the sector, but you have to identify companies which will benefit from this transition. Some companies will suffer from this transition. Some companies will benefit from the transition. And those are the segments and companies one has to identify and invest.
Okay. Now, where do we go from here in terms of some of the good old themes, defense, PSUs? Where does that fit in?
I think, see, again, defense, a lot of cleaning has happened. Still, I feel could happen some more. But again, I would say depends on the name and depends on the business model. I would not just defense spending is going to increase, is increasing, but it has its own sort of risk reward. So I would always say that look at company specific, and valuation is very, very important. Defense does not mean that you end up paying any valuation, and that's very, very important. So theme remains intact. There's no question on that. Same way, I think within PSU also, again, PSU is not a sector, but PSU, I think you have to look at specific companies. Like, let's say PSU banks, we are quite optimistic about. We have seen a lot of sort of value correction happen, and valuations are quite reasonable, 0.6, 0.7 time book, which we saw similar kind of valuation, by the way, in 22. And from there, we saw good numbers coming through. So whatever happened at the macro policy level on the monetary side will have positive impact on the growth of these companies. And so that could lead to some bit of re-rating, and there could be good risk reward for PSU banks. So I would say look at the sector, and within that PSU in general basket is doing sort of well from a governance perspective, but then you have to live with the nuance of each sector and business model of the PSU.
Have you identified anything new which we should discuss? Because last time when we spoke about names like Aditya Birla Retail. In this correction, I'm sure you've shopped a lot. जब सेल लगती है जब तो माल खरीदते हो भाई.
So I won't discuss name, Nikunj, but I would say that I think this year, and I continue to believe that banking, we overweight banking and financial services, especially the large banks, some of the NBFCs, like you mentioned, they would outperform this year. Already they are outperforming the broader market. They would outperform this year. They will do very well. And that I think is looking pretty decent. Some of the pharma names looking pretty decent. Within manufacturing, because of this whole worry about stocks have corrected, and I think so. So I think nothing new per se. The only thing probably I would say that in this market, we've also kind of done a little bit more around the power and electricity side of the business, because I think that's again another structural theme, but that's part of sub theme of manufacturing in some sense. But we think that incrementally India is staring at a power shortage over the next 3, 4, 5 years, and the consumption of the electricity is going to go up because of data center, because of infrastructure, metros, malls, office building, residential towers. So as the consumption of the electricity goes up, I think you need to keep pace with the generation and the entire ecosystem. And there, I think a lot of investment, not only in India, globally is likely to happen. And hence, I think that's a one probably segment or sector which I think one should look at, commit some serious amount of. We already have that, but I think some serious amount of we continue to kind of add as and when we get good, interesting opportunity out there.
Alright, then defense and PSU valuations is something that you should be looking at. That's the word coming in from Vikas Khimani as well. But speaking of valuations, then we also caught up with Ravi Dharamshi, who in fact believes that valuations are back below long-term averages and the worst could be behind us. Let's listen into what he had to say about valuations as well.
There are three buckets. One is the deep value bucket. Over there, I feel the large private sector banks, some general insurance companies, and some NBFCs and life insurance companies as well. These sectors fall under the deep value kind of opportunity. There are some sectors where there is continuing business momentum. So whether it is renewables, whether it is power transmission, these are continuing business momentum, and we continue to like that as well. And there are some new age sectors which are probably still not yet represented in the market, and which probably brings us to the private equity piece of it, is that aerospace. I think these are all new sectors being born in the market, and people yet don't know the kind of potential it holds. And that is what we will uncover some of it in our private equity investor day today.
Okay, some of the themes in the private equity investor day are aerospace, energy transmission. Now these are big boy businesses which require a lot of capex. They are dominated by large groups, and while they are exciting businesses, they are not the typical pace where private equity investors they invest in.
No, so see, you are right. The larger piece, the large system integrators or the OEMs is the big boys game. But there is a big supply chain attached to that, where there are a lot of small players which can scale up quite dramatically. And energy transition is not one sector, right?
That was Ravi Dharamshi's mantra to thrive in this market. Now moving on, let's get you some news updates from the domestic front. Well, stand-up comedian Kunal Kamra has responded to the controversy sparked by his show at Mumbai's Habitat studio. He has shared a statement on his social media handles amid the political slugfest over his trader jibe at Maharashtra Deputy CM Eknath Shinde. He refused to apologize for his remarks and has said that he will now not bow down to the mob that's targeting him. Well, there's another update from Uttar Pradesh. Allahabad lawyers have upped their ante against Justice Yashwant Verma following cash haul from his residence. Lawyers of the High Court have announced that indefinite strike from today over Supreme Court's decision to repatriate the judge to Allahabad High Court.
Rather than moving on, the season of toxicity is back in the capital. Delhi's air dips to poor category, leading to reinforcement of GRAP Stage 1. Meanwhile, the weather department, in fact, has predicted clear skies today with the maximum temperature likely to settle at 37 degrees Celsius and the minimum at 16 degrees Celsius. Moving on to the world of sports, then Shubman Gill-led Gujarat Titans is all set to begin their IPL 2025 campaign against the Punjab Kings in Ahmedabad Narendra Modi Stadium today. And in the last season, Gujarat Titans in fact finished 8th on the table with 12 points. Punjab Kings finished 9th with 10 points from 14 matches. So that's the latest coming in as far as the world of sports is concerned. But with that, completely timed out on this edition of Market Cafe on ET Now. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.